You see gold today? It hit $2,803 an ounce. We went on the air right now. It's at $2,796 an ounce. And what would we say? One of our top trends of 2024? Bitcoin. Yep. Again, you know us. We've been very bullish on Bitcoin. It's back into that 1,000 fund. I mean, $500. This is amazing. Brent crude went up a little bit because of the sanctions things, but it's still low. It's only at $77 a barrel. So we got to see what's going to happen.
In today's news recap, gold prices above $2,800 as U.S. core PCE rises 2.8% in the last 12 months. The gold market continues to see solid bullish momentum, with prices trading above $2,800 an ounce as U.S. inflation data remains stubbornly elevated in line with expectations. The Core Personal Consumption Expenditures Index, which excludes volatile goods and energy prices and is the Federal Reserve's preferred inflation gauge, increased by 0.2% last month compared to November's rise of 0.1%, the U.S. Department of Commerce reported Friday. Consumer prices rose in line with consensus estimates. Over the past 12 months, core inflation rose 2.8%, unchanged from November's reading. Meanwhile, headline PCE increased by 0.3% last month and 2.6% for the year. The gold market is not seeing much reaction to the latest inflation data, continuing to trade with solid bullish momentum. Spot gold last traded at $2,804 an ounce, up 0.31% on the day. Analysts note that the latest inflation data presents a mixed picture for gold. Elevated consumer prices will likely prevent the Federal Reserve from cutting interest rates anytime soon. However, the fact that inflation remains unchecked poses a threat to the economy, reinforcing gold's safe haven appeal. The report also highlighted robust consumption growth, with personal spending increasing by 0.7%, up from November's rise of 0.4%. The data exceeded expectations as economists had forecast a 0.5% increase. The latest consumption data is likely to support expectations that the Federal Reserve will keep interest rates unchanged for the foreseeable future. On Wednesday, Federal Reserve Chair Jerome Powell stated that the central bank is in no hurry to cut rates this year, given that inflation remains elevated and the labor market remains healthy. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Fourth quarter GDP only came in at 2.3%, lower than expected. So the Fed yesterday, they paused on the rates, and Trump is angry about that. And we say he's going to keep lowering them and lowering them and lowering them. He just got in, so this is just a play game right now. You see gold today? It hit $2,803 an ounce. We went on the air right now. It's at $2,796 an ounce. And what would we say? One of our top trends of 2024? A golden year for gold. Back then, gold was at $2,041, January 2nd, 2024. That's why you subscribe to the Trends Journal. Bitcoin. Yep. Again, you know us. We've been very bullish on Bitcoin. It's back into that 1,000 fund. I mean, $500. This is amazing. Brent crude went up a little bit because of the sanctions things, but it's still low. It's only at $77 a barrel. So we got to see what's going to happen. And meanwhile, over there in the EU, or the FU, Eurozone GDP, this is the language that they use. This is the bullshit that they use. This is from Eurozone News, Euronews. Eurozone GDP stagnated in the fourth quarter, 2024, as Germany GDP declined 0.2% and France 0.1% contracted. That's contraction. That's not stagnating. Capiche? So what are you saying this shit for? And again, Germany's the third largest economy in the world. I think France is like number 6 or 7. It's up there too. So this is dragflation. Inflation's going up and the economies are going down. The Eurozone economy grounded to a halt in the fourth quarter of 2024 as Germany and France, the bloc's two largest economies, posted worse than expected contractions. No, they didn't. Not worse than expected. We said this is going to happen. Been writing about it week after week, month after month, but they keep going on. The biggest drag on growth came from Germany and France, with both unexpectedly contracted. Total fucking bullshit. And it's not stagflation, it's dragflation. Inflation's going up and the economies are going down. But you can't say drag, can't say drag.
In today's news recap, global silver market forecast to remain in a sizable deficit in 2025. Silver industrial demand on track to post new record. The silver market is forecast to record another significant deficit, total supply less demand for the fifth consecutive year in 2025. In keeping with previous years, silver industrial demand will remain the key driver of this favorable supply-demand backdrop, with volumes projected to hit a new record high this year. Concerns about President Donald Trump's anticipated tariff policies have fueled short covering and deliveries of silver into CME warehouses since late 2024. This, coupled with rising economic and geopolitical uncertainties, has underpinned a healthy recovery in silver prices since the start of 2025. Over the same time, silver investment has faced several challenges. For example, ongoing concerns about the prospects for the Chinese economy have weighed on silver, which helps explain the elevated gold-silver ratio that has persisted. On the demand side, global silver demand is expected to remain broadly stable in 2025 at 1.2 billion ounces, as gains in industrial applications and retail investment will be mitigated by weaker jewelry and silverware demand. Silver industrial fabrication is forecast to grow by 3% this year and will benefit from ongoing structural gains in green economy applications. Despite looming pressure on U.S. renewable energy projects under President Trump's second term, global photovoltaics installations are expected to achieve another all-time high in 2025. Silver physical investment is also forecast to rise by 3% thanks to improving demand in Europe and North America. As Western investors adjust to new price levels, fresh investment is expected to improve and profit-taking will also ease. However, without any dramatic crisis events, the scale of recovery will be limited, considering robust demand over 2020 to 23 and the subsequent rise in investors' silver holdings. A slight decline in India, where high local silver prices will encourage liquidations, will offset some of these gains. Before we show you more clips, smash the subscribe button and check out our huge discount on NordVPN, the fastest and most reliable VPN on the market. This VPN service is a perfect fit for smart stackers who want their privacy protected and don't want their data compromised by prying eyes. For less than the price of a cup of coffee, secure your internet access and get 3 free months with our promo. Believe me, the only problem you'll ever have is that you didn't get it 6 months ago. Let's get back into the episode.
So, the markets, and by the way, salud. Got to have a little bit of vino. Little bit of vino bambino. So this is an article in the Wall Street Journal today. DeepSeek isn't only company making advances with AI models. And they list a whole bunch of them. This is big. The dot-com bust has happened. They're going to do everything they can to cover it up. Venture capitalists plowed money into companies like OpenAI and Anthropic, but now the script has flopped. There's an article in the toilet paper record, the New York Times. They're talking about all the money that was pumped into the. For 2 years, venture capital firms have been engaged in a funding frenzy, pouring more than $155 billion into AI between 2023 and 2024, according to PitchBook. OpenAI and Anthropic have raised $24 billion, blah, 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 on and on and on. They go on to say, if the Chinese upstart can create an app as powerful as OpenAI's ChatGPT or Anthropic's blah, 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 with hardly any money, why did those companies need to raise so much cash? Trends are born, they grow, they mature, reach old age, and die. We had said from the very beginning, the AI trend has just been born. And again, the reason the dot-com bust happened was the internet revolution had just begun several years earlier. So there was always speculation. But doesn't it mean it's going to end? It's going to keep going. This is really serious because it's going to have a lot of other effects besides bringing down the equity markets. Wall Street reconsiders the energy need to power new computing. The emergence of Chinese, blah, 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 you don't need all this energy to do this. And now they put all that money into these companies. And now you're seeing those stocks go down. Oh, here's an article, again, the Wall Street Journal. You ready? U.S. office sector is attracting investors. Look at it. Attracting investors, right? Value, then they buried down the bottom. They're buying up buildings cheaply. Office building sales increased to $63 billion in 2024, when the average between 2015 and 2019 was $143 billion. But anyway, they go on to say, values for office buildings that are less than premium grade are about 35 to 60% lower. 35 to 60% lower. There's going to be an office building bust that nobody's talking about. And they're trying to pump it up with this fake shit.
What do you think about Gerald Celente's bullish stance on gold? Do you agree that it remains one of the top trends heading into 2025 despite the recent sell-off? Share your thoughts in the comments below. We'd love to hear your perspective. And don't forget to like, subscribe, and hit the notification bell to stay updated on all things gold, silver, and market trends. Thanks for watching, and we'll see you in the next video.